What if I told you the market crash you're seeing right now might not be an accident? That the financial chaos unfolding could be part of a bigger plan? Sounds crazy, right? But stick with me, because by the end of this video, you'll understand exactly what's happening, why it matters, and most importantly, how you can use this to your advantage. Hi everyone! Today we're diving into something big. Over the past few weeks, we've seen one of the sharpest stock market drops since 2022. Fear is spreading, prices are falling, and people are wondering, is this just another correction, or is there something much worse coming? I'm going to break it all down for you. Why the market is crashing, how bad things could really get, and what you can do right now to protect yourself financially. And trust me, you don't want to miss the part where I explain how this entire situation could be deliberate. Before we get started, do me a quick favor. Hit that like button and subscribe if you haven't already. Let's get into it. High interest rates make borrowing costly, slowing investments, but that's just part of the problem. But instead of panicking, let's focus on the facts. In this video, I'll break down why the market is crashing, how things might get worse before they improve, what you can do to stay ahead financially. The market's biggest problem? Tariffs. Right now we're caught in an economic storm, and trade tariffs are a key driver. Here's how it usually goes. 1. Tariff threats emerge. Markets panic. 2. When tariffs hit, stocks plunge. No one expects them to stick. 3. A deal is reached, offering temporary relief. 4. New tariff threats appear, restarting the cycle. Until now, investors saw tariffs as mere negotiation tactics, but this time is different. They might be here to stay, and that changes everything. Now let's dive into what this means for your finances and how to navigate what's next. Starting March the 12th, new tariffs are set to roll out, including a massive 250% duty on Canadian dairy, but that's just the beginning. A steep tariff on Canadian timber is also expected, with concerns that these trade restrictions could keep escalating. While some dairy imports will still enter the US tariff-free, business owners remain uncertain. Should they stock up now, or raise prices to cover rising costs? Other countries are striking back. Canada's slapped a 25% tariff on electricity exports to states like New York, Minnesota, and Michigan. China has also retaliated, hitting US farm products with 15% tariffs. Investors are now bracing for higher costs, slower economic growth, recession fears, and the risk of even greater turmoil. A hidden factor behind the market's decline? Could this crash be intentional? Now, this is just speculation, but here's what we know for sure. The US government is drowning in over $36 trillion in debt, and it's becoming a serious issue right now. Like a homeowner with a mortgage, the government must pay interest on what it owes. When rates were low, this was manageable, but now borrowing costs have skyrocketed and the burden is growing fast. And that's where the real challenge begins. A major shift in government spending. For the first time ever, the US is spending more on interest payments than national defense. And in 2025, $9.2 trillion in debt needs refinancing. The government faces two choices. 1. Lock in today's high rates and pay a fortune in interest. 2. Trigger a downturn to force rates lower and refinance at a discount. While this is speculation, 70% of that debt must be refinanced by June 2025. If nothing changes, costs could rise by $156 for every $1 of US revenue. Could this be part of a strategic move? Trump has repeatedly pushed for lower interest rates, hinting at a bigger plan. No one builds wealth when borrowing is expensive. Rates are dropping, and I'd love to see energy prices fall too. My job is to strengthen the country, not focus on short-term stock moves. This could be framed as a way to make assets like stocks, real estate, and Bitcoin cheaper for the middle class, offering a 10 to 30% discount. But how much worse could things really get? How bad could this market downturn get? There are 3 levels of market declines every investor should understand. Market correction, a drop of 10% or more, completely normal and happens every 16 months on average. Bear market, a 20% plus decline from recent highs, occurring roughly every 7 to 10 years. On average, stocks fall 33.2% over 365 days. Stock market crash, a 40% plus collapse across all sectors. In the last 120 years, this has only happened 3 times. While crashes are rare, they're never impossible. Turning uncertainty into opportunity. Hesitation is the biggest enemy of wealth building. In 2011, when I started buying real estate, the market had already crashed 50%. I was getting properties for 20 cents on the dollar, yet everyone told me to wait, but I didn't, and that made all the difference. Ignoring the noise paid off. That so-called hidden inventory never appeared. Prices bounced back, and I'm grateful I ignored the fear-mongering. Even in 2017, 2020, and 2022, predictions of crashes flooded the news, but I stuck with consistent investing and dollar-cost averaging. And I'm glad I did. Investing isn't a game. Investing shouldn't be thrilling. A market where people gamble their savings on hype stocks, chasing overnight wealth, isn't sustainable. Trying to outperform the market is either a calculated risk or pure speculation. And lately, the difference has become blurred. Overconfidence destroys portfolios. If you think you've figured out the market, you've already lost. The less you try to predict trends, the better your results. Research proves that the most successful investors simply buy into index funds regularly, hold long-term for decades. Ironically, deceased investors outperform active traders because they never panic sell. Market drops are always worse than expected. You buy in as prices drop, then they fall further. You invest more, and it keeps crashing. Eventually, you're out of money, and the market still isn't done. Historically, markets bottom out when people give up, believing the economy is beyond saving. The market always feels different. In 2020, 2010, and even 2001, people believed the economy wouldn't recover. Every generation thinks this time is different. But history shows markets always bounce back. The key is expecting the worst and preparing for it. Good financial habits win in any market. Now is the time to earn extra, cut unnecessary spending, and invest wisely. But the truth, you should be doing this all the time. It's not exciting to live frugally, while others boast about huge meme stock gains, but long-term discipline always wins. I've seen careers vanish, businesses fail, and investments crash. That's why I stay cautious. Why you must stay invested. 50% of the market's best days happened during bear markets. 34% more took place in the first 2 months of recovery. Miss those days, your returns take a major hit. That's why, no matter how uncertain things seem, I stay invested. If prices drop, I just see it as a discount. This video is for educational and informational purposes only, and should not be considered financial advice. I am not a financial advisor. So always do your own research and consult a professional before making any investment decisions. If you found this valuable, tap that like button, subscribe, and I'll see you in the next video. Your journey to financial freedom continues, and I am excited to be a part of it. Here's to your investing success. Profitable investing.